Do you anticipate a rough patch in the next couple of years?
100%. It's going to happen. It's, the way I look at it is you look at the average home price, and I always tell my clients, is the average home price COVID was probably, I'd say around Hamilton, I think it was around 700,000 if I'm not. And then at the peak was just hovering at $1 million. I go, has your income increased over, 40%? So you tell me where that money's gonna come from to get your $1 million home.
Hit it! That's what I'm talking about. Wait!
Okay, now, from the beginning.
Hit it, boy.
All right, this is Real Talk with Carmen Costa. Like I've stated before, we are going to feature our agents, Prachi Dutta. Dude, I feel like I just butchered your last name.
I was like, geez, it's like going back to university again.
Prachi, what is your name?
It's Prachi Dutta.
Dutta. Oh, okay, so I was right. Prachi, you've been with the team, what is it?
7 years.
Close to 7 months. I wanted to get your opinion on what's going on in the market. People have heard it from me, but I actually, I'm bringing you guys on just to discuss, what is happening. So, here's a question we've been asking. We had an appraiser this morning. We asked Kevin, how has the market changed since January?
I think right now we're a bit of a transition. A lot of realtors will say a balanced. I'm saying we're almost I don't think we're going from a balance to almost a buyer's market. The reason why I say that is that, before you'd see realtors just put a bottom price on a home and they'll just have multiple competitive offers and they'll just drive the price now. Now just with, you've seen the reports from the market reports for sales in the Hamilton area and everything's down year over year. So, now it's almost a great time for people that are getting first-time home buyers, because the reason why I say it's great for first-time home buyers is that they don't have anything holding them back. Like, for example, and like to me, I think we're in the beginning of a recession. I think.
Thank you.
A lot of people, no politician will want to say that they are, because they don't want to be remembered as the person that's been in term during a recession. But if you look at anything, they just said, even though today the inflation numbers went down again, but if you looked at
But what is the actual true inflation number, though?
Well, they said, last night I was watching the news and they said groceries are up by 11%. It's the biggest thing is just like anything, as much as you have to now more than ever seek out the information, because I think as Canadians, we're very protected. Until it's too late, you really don't know what it is. And, for me, a big thing is that, I try to minimize that uncertainty, because it's the whole thing is that, interest rates are rising, yes, but the whole thing is that we've have almost 2 generations now of low interest rates.
Correct.
A lot of times we've been seasoned to get used to these low interest rates. But, for myself, I'm still in a variable rate mortgage and I don't have any plans. It's, the biggest thing is, since I come from a financial planning background, I have access to, like what we talked about, is the index chart.
I'm all about the index chart.
So, the index chart will show how GIC rates are, how inflation's been, unemployment, and on top of that, the Bank of Canada rate.
So when I mentioned it on Saturday, yep. I mentioned it to the guest speaker or the panel speaker. He was like, the index chart. And I was like, how do people not know this, right? Like, we're in this business. That's where I get all my, history on what's happening, right? We got that at the bank, right? Yep. So, Prachi, how have you, how have you dealt with the changes happening? Like with your book of business and your clientele, right? People are asking you, I'm sure.
100%.
Yeah.
And the biggest thing I always tell my clients is it all depends on what side of the spectrum you're on. For me, I have a good book of investors. So what we've been doing is, with the rates being the way they are, we've been trying to pull out the equity so it's sit there parked. Because if you look at GIC rates, you're around 4%.
Correct.
So what's losing 1%? And if we're going to hit a full out recession, I think, I think there'll be foreclosures coming up, and it's a great time for investors, because I know for myself, that's where I think it's going to go. The biggest thing I'll say is that people that bought houses in the last 3 to 4 months, they say house prices have gone down 13%. So literally, if you think about it, most people buy their house 80% loan to value. So essentially what your mortgage is for is technically what it's worth.
It's 100%, yeah.
And on top of that, they say the next year it's going to go down another 20%. So, it's the biggest thing I could say is it's just like investing. You cannot market time. If you plan to market time, well, then everyone's going to do it. It's kind of like when COVID first hit. There was that uncertainty in the
2
real
weeks.
estates.
It was 2 weeks.
Exactly. But the thing is, the people that bought had a great opportunity then.
Correct.
And then boom, it just flew off, because then, people are moving to out east. People buy in Alberta or whatever. And then people are going to more remote areas like Hamilton, everything like that. It's the biggest thing is that you cannot market time. It is what it is. The rates are what it is. The biggest thing I tell people is you need to get into the market. Rates are going to
Correct.
be what it is. And if you look at 5 years time, those people that are coming up for due, another problem they're going to have is trying to figure out how are they going to come up with the extra money, because they're probably in the twos, high twos, if threes 5 years ago, and they're going to have to come up at 5 if they're going to go fixed rate. For me, the reason why I always recommend variable is that historically, it's known that most often Canadians will not stick to their home for 5 years. There's going to be a life event that transitions. And, banks will always tell you that go to fix. Even the way we're compensated, we get more for a fix. But to me, that's not the big deal. To me, I like flexibility. I like dictating my terms. So that's why I always recommend the variable. And I tell them why. Is because, sure, you got 2%. But the thing is, what comes after, what's going to happen then? And we've seen the other side where rates are like high ones, mid ones, and then they're like, oh, we missed out an opportunity. This is the best of both worlds. The other thing, like for me, what I was thinking too is that, for a person, most Canadians, we're like one of the highest G7 countries per capita for debt. And to me, the one thing I always tell people is that, we spend more time planning a vacation than we do our own finances. And the way I always operate is that I expect transparency from the beginning.
100%.
And I tell them, I'm gonna set the plan out, but the whole thing is the plan's only as good as the information you're gonna divulge. When I meet the person, first thing I do is, okay, let's sign the credit consent and the PPIDA, and let's figure out what's on your credit bureau. I did this with a client 2 weeks ago. Now more than ever, there's multifamily people on an application. I was having the couple and their daughter, because eventually they want to give the house to their daughter. So, I pulled the credit bureau. I was like, okay, this is something we've seen. So the whole thing is it takes time to prepare. And the better prepared you are, and the thing is you need the advice of an experienced broker. Because
100%. Just
like realtors now, there's been a lot of realtors that came in just into the industry, just like mortgage agents that just want the quick buck. And
100%.
And I think we're going to go through a transition too, because it's not these quick, easy money you're going to make. For me, where I like anyone could do a mortgage, anyone could sell a home 3-4 years ago. And I talked to a realtor, it's like, yeah, it's going to be more fun because now it's going to be a bit of a cat and mouse game. Okay, this is what it is. No one really knows what a true home value is right now.
100%.
And, like I'll say, like I live in the Niagara area. I just seen like my one friend, she mentioned that, there was a house listing for $799. They sold at $670. And
that's a first.
yeah. And the whole thing is that you could sell your house whatever it is. It's the biggest thing is that appraisal, and the biggest thing is education. If you're not educating the client Well, then the whole thing is that we are programmed as Canadians as, first you go to school, you get your job, you get a house. But the thing is, no one really knows the hard work behind it. And like, for example, I was taught it when I was a kid. My parents were very strict on us. And, I didn't do the cool thing of when I went to school, I lived on campus, I paid rent. The biggest thing I was always taught right from the beginning is why pay someone else's rent.
For sure.
So, even like I could have lived downtown Toronto, whatever, when I worked down there, but I lived at home. The biggest thing I always did was half my paycheck went to an investment for my down payment for my house. We were told that, when my kids, when I was a kid, biggest thing my dad would always take his change and put it in his pocket and put it into our piggy banks. And, at the end of the month, we would, part of it be our choice. Do we go to we spend it on candy or we deposit? And what we'd always do is that we'd always deposit we'll buy baseball cards. So that was our thing.
That's awesome.
And then when we were getting older, it's like, what do we do with the money? Okay, do you want to buy a car or do you just want to just waste it? Or live off, would do whatever you want. So we were very disciplined for it. And we see it now. Like my wife's a teacher and she sees it where, even when she was doing remote learning, you'd see the parents just whisper the answer to the kids. So, it's aggravating. But the whole thing is, the biggest thing is that as Canadians, the whole point of me rambling on is that we are programmed to think the best case situation. We are almost like we shelter ourselves too much. Correct. And that's the biggest problem we have. And I think this is going to be the next wake-up call since we probably had since 2008. For me, I bought my first house at 2008 during the recession. When it was
2008 was me. Yeah.
Yep.
I got my first condo.
Exactly. Like
$45,000.
For me, it was just on Peachwood over here, just a couple blocks away, and I paid $228 and $1, and we had 23 offers. And when I found out, and it was built about 3-4 years prior, and we paid $5,000 more than what that house was selling for when I purchased. And another thing too is that another thing I'll talk about is that I just talked to a client yesterday that wants to buy an assignment sale. Goes in December. I told him not to, because no one really knows what the true housing market is, because the biggest thing is we have all these people from GTA and whatever that bought these pre-construction homes in the hopes because their plan is to flip it. And I was like, okay, December. And I'm like, okay, what do you buy for? $840. So he's going to sell it. He wanted to sell it for $1,080,000. I go in December. I go, that person now has to qualify at the going rate right now, roughly, and then has to service that debt. Unless you have your house free and clear, it's going to be very tough. And I think there's going to be an influx of these pre-construction or people walking away. That's my personal thing. But because
we haven't seen what the pre-con market looks like yet. We haven't. And that's the thing. We can speculate. And at the property show, there was a lot of speculation that pre-con is the way to go, blah, blah, blah. But the truth is, you're right. I have 4 people buying, closing now in February. It's been pushed, second tentative closing to February of next year. And I'm like, you need to offload a property. You can't even qualify for this anymore. You're done, right? So, and he's like, I don't want to sell one of my properties. I'm like, you need to sell a rental for you to close on this, right? And it's one of those where the builder is not allowing assignments, right? And we've heard that. So you are right to that point. Pre-con, we don't even know what that market holds yet. And they haven't even closed yet.
No, and that's the thing. Like, to me, not doing assignments is a way for the builder to protect his asset. But the whole thing is that the one biggest thing is we were kind of like we've been sheltered the last 7-8 years. Everyone thinks, we've almost had 2 generations now of almost low interest rates.
Correct.
And that's what we're pre-programmed to do. And the biggest thing is that whenever I do a pre-approval, the chance of that pre-approval where the person purchased something at or below are very minimal. You know,
For sure.
everyone wants that house
Max,
at their
yeah.
parents' house. You know,
We started off. Honestly, Prachi, I started off at a $45,000 condo on Nicholas Drive.
Yep.
45,000. You know what I mean? I could have afforded more. I was just like stressed over that, right? Like I'm like, oh no, that's too much of a big payment for me. Then I moved up to 120. Then I moved up the scale. But I got into the market 2008.
Yep. And the biggest thing I always tell my clients is that the biggest thing is they're usually renters that are transitioning.
For
and
sure.
the whole thing is it's a change of mindset. The renting mindset versus the home ownership mindset is totally different. When you just rent, you have your fixed expenses, great. And then you have this extra money. What people do, they spend it. And that's what we've been that's what we've been doing for the last 7 to 8 years. I look at, when I'm driving to work, the biggest thing is I'll say, how many cars are probably 5 years plus old? Everyone has a fairly nice car. You know, you don't see any old cars coming to the point where, you know, they're about over 10 years, I would say, you know, with 0% financing and everything like that.
My first car was like a Honda CRV. I paid cash. I walked into the dealership with my father. I'll never forget. And I paid $6,500 cash. I gave $6,500. It was a Honda CRV, had it for 2 years. But then one of my nieces and nephews bought, I can't even remember, it was an Acura. And I was shocked. They were financing an Acura, right? So it's crazy. But I want to know from your perspective, do you see a lot of deals not closing? And how do you think we're going to deal with that? Just out of curiosity, like in the next couple of years? Even now, like we saw, so let me just throw some content because we're going to have the appraiser who we spoke to. Yep. So he's saying he's seeing a lot of files not closed due to value. Yep. So he's like, I'm trying to deal with, deals not closing because the value's not coming in because they bought in April. They're closing in September. They listed their property after the fact, used numbers that were April numbers, and now it's not closing, right? So he's like, Karma, I'm seeing deals, litigation happen. What are your thoughts on that? And how would you're so calm nature, Prachi, I want to throw this out there. You know, if anybody wants to deal with somebody that cares, has compassion, empathy, who honestly goes above and beyond, Prachi's your guy, right? So, but how would you deal with that, you know?
The biggest thing I'd deal with is that a realtor is a key component. The reason why it says the realtor is that it all depends on if he has his head in the clouds or he's realistic of the current market that we're in.
Love it.
And the reason why I say is that, you know, what I always say is that, you know, we're all in a relationship, and there's no bigger relationship in purchasing a home. So you have your realtor, you have your mortgage agent, broker, and then you have yourself. It's like, you know, that circle of friends thing you've seen.
For
you
sure.
know, and the biggest thing I'm very my big thing is I'm a big thing on communication. And you know, if a realtor has them focused on they're going to get this price when they're in the market where there's the price is really here, I think you're going to see more of that because I think the listings aren't there anymore. They're reducing. The other thing too is that now in the world of technology, it's our own duty to be as educated as possible to know what the realistic price is.
For sure.
You know, for me, I use like House Sigma app. You know, now since you could see what the house is sold for, you could see in the geographic area in a time frame what the value has and do your comparison there. You know, the thing is the consumer has to be as educated as possible and take advantage of the technologies that there. Because for me, that's what I'd do. I'd say,
here's what I want to throw out to the viewers out there. So here's what I'm saying about you, Prachi. Freaking love you. So here's what I'm trying to say. So let's say a buyer comes through and a buyer's with you, and let's say the realtor doesn't really have their best interest. Not that I'm saying realtors don't, but they're off the mark. Would you follow suit, or would you stop and say, hey, hold on a second, pump the brakes. I have all these, all this that I'm researching. Yep. Your properties, like that property you're looking at, it's a little off the mark. Would you do that?
100%. The first thing I do is that, I work for the client, not the realtor. The whole thing is I'll get the job done, But the thing is, everyone wants that A rate. They don't want to go to A, B, or private, or so on and so forth.
For sure.
But the whole thing is, what I'll do is that, they'll come back and they'll show me a few houses. Usually they'll see it. I'll get the after effect, what they put an offer on. So the first thing I'll do is I'll go on my app and go look at geographic area. This is what I think the house will appraise at. I'm not an expert, I can't say, but I can make a rough estimation with what that house value. This is what you paid. My thing is that I would go to them and say, what's your plan if we don't get that value?
I love it.
And the biggest thing I always tell clients, make sure now more than ever, you have a condition of financing. You do not buy a house now without that or go all
It's
in.
shocking to see. I had an offer where the agent called me and she's like, well, there's a ton of, bidders on this. We need to go no condition. I'm like, we're out of that era. Like, we're not even in that era anymore where you're not putting condition. Like the appraiser this morning said, put home inspection and a condition of finance. And so you can actually pay a professional to do a home inspection and pay an appraiser like for that financing aspect. Because, even if you're pre-qualified, the lender still has to do an appraisal on that property.
Yep.
And what is the time frame now for appraisals? It's more than 5 business days, right? So they're doing full appraisals now on properties because I think like lenders are now looking and saying, there's a lot of mortgages on our books with high values. If we're looking at the same value on that property from April, January to today, that house isn't going to appraise. So what's going to happen? Are they going to offload that cargo? There's a lot of variables to this. And, all I care about, honestly, Prachi, is I know you're doing the work. You go above and beyond where regardless of what that real estate agent is saying, you're saying to the client, hey, listen, I've done a little research, and that's what you do. You add that service and it's amazing to see, and it's hard. Like we've talked about how hard it is in this industry to be transparent, to not be a follower and a yes man to a realtor and be like, yes, for sure. We're working on behalf of the client, right? And that's key and important. One thing I wanted to ask you, Prachi, any excellent advice you would give to any buyer, somebody refinancing, any of the mortgage market out there, what type of advice would you give them?
The biggest thing I would say is that especially for a first-time home buyer is, have a plan. You cannot just flip the switch and buy a house. We have, that's the biggest thing. It takes time to come up with the down payment. I know they're trying to come up with different ways to help save, but at the end of the day, the onus is on you. 5% now, if you look at the Hamilton area average home price, well, at its peak was about $1 million. So if you're looking at 5%, that's a lot of money. Mm-hmm. And the whole thing is that how are you going to come up with that? Because as soon as you're done school, most people have their school debt. Once you get married, you want to save for the wedding. When you have the wedding, then it's the kids. So where in that life event is to save for the down payment of your home? And not a lot of people plan for that. And that's the thing you have to plan. I remember when I was in college, one of the first days, if you do contribute $25 a week or biweekly, whatever, by the time you retire, you'll have $1 million. And that puts something in perspective. Now we have to have that conversation with our kids is that you need to start saving right away.
For sure.
And the biggest thing is that you can't just have the expectations and live the life like your parents have at that point when you're buying a house. It takes time. And the biggest thing is reintroducing the starter home. Like, for example, I'm on my second home. I bought my first starter home. There is progressions, just like, you're not the CEO of a company on day one.
God, no.
You need to work up to it. You need to build a skill. You need to know everything before. It's not any different buying a house. You need to start small because really, when it's just you and your wife or, what is the expectation? You really don't need a large home. You need 100%. To start some, and we've had the last 2 years, we've had growth in housing prices of 20%. Was that ever feasible? No. And the thing is now when we're starting to correct, it's like, okay, where are we going to correct to? And the thing is that your down payment needs to meet where you're going to do. And You had a client yesterday say, houses that I like at 900,000, we don't like it. It's a million one and million two, I was a million to whatever. And I'm like, well, and the biggest thing is I was always taught is that even if you watch any of those tons of home improvement shows, it's not about how it looks, it's the bones. And can you
100%.
make it work? And the thing is that can that house grow with your family? Can you do certain things to increase the value? It's, nowadays, the house that you buy, you're not going to have the appreciation of value as you are to buying a turnkey house.
100%.
You need to be able to do some of the work yourself or figure out the trades or whatever to get there and have a budget. And the thing where we come in is helping you through that process. For me, it's like, since I was a financial planner before, I could help you save. And the thing is that
There's also the purchase plus improvements.
exactly.
Right? People forget about that program because you're right. This has been a turnkey house. The bigger, the better. Right?
Exactly.
I flipped so many homes and honestly, it's shocking to see when you go for the bigger, the better, it's always more costly.
Yep. And the biggest thing I always tell my new clients is what's the difference? What is your need versus a want? Those are the two things I tell clients is that everyone, sure, I want a pool, I want the basement to be done, but is that really a necessity? Can you make the house work the way it is? And nothing changes things that could change are your flooring, paint, those are minor. It's the whole thing is you can't just have that house where you want turkey. It takes time. And just like it was for my parents, it's going to be just like for myself, And the other thing too is that, when you buy a new car, that 0% financing really isn't 0%.
It's worked into the price.
That plus you don't realize what that 0% financing is doing to the rest of your financial portfolio or your finances. Because the whole thing is that car loans are 5 to 7 years. And cars, you look at a car now, to get a half decent car, you're probably looking around 40 to 60,000, that range. And now we want SUVs, so that's even higher.
For sure.
And you got to pay that off in 5 to 6 years. So if your plan is to buy a house, well, 9 times out of 10, you can't carry that car loan. And that's the toughest thing is that that's a large payment in a short period of time. And even though it's no interest, it may not be the best suited product for yourself. And that's the whole thing where I say you have to change the mind frame. And for example, a lot of my clients are investors. So same thing as we refinance their home, put their car loan in to get them qualified. But the reason being is when you buy that rental property, you're only putting 20% down. But if you're looking at your appreciation value, I'd say around your average appreciation is anywhere from 4 to 5%. That's a standard good year. On a 20% down payment, that's you're making 3 times that a year.
100%.
And you have someone else paying for your mortgage. So you have a reoccurring revenue model to help you with that. And that's the thing, that's where we want it to be. And, the next 2 years, it's going to be great for investors. It's going to be.
So that's my next question. Do you anticipate a rough patch in the next couple of years?
100%. It's going to happen. It's, the way I look at it is you look at the average home price. And I always tell my clients, is the average home price COVID was probably, I'd say around Hamilton, I think it was around 700,000 if I'm not. And then at the peak was just hovering at $1 million. I go, has your income increased over 40%? So you tell me where that money is going to come from to get your $1 million home. And if your income hasn't done that, well then sorry, you need to have a plan to get you to, or you have to temper your expectations.
100%.
For me, it was you see all the revitalizations and everything like that. But at the same time is that, like I said earlier, I'm curious to see on these assignment sales. It's, what they, they'll show everything and then clients do it. I'm like, yeah, give it 3-6 months, see what happens. I'm going to tell you that these guys want to get out because the whole thing is they've been pre-programmed. They've done it multiple times and they made a good quick buck. But now it's totally different because they usually have 1 or 2, and 9 times out of 10, they're not going to qualify at that value. And you have to too. And at the same time is if you look now, the biggest thing is stated income. You know, if you look at any mortgage insurance at stated income, they're only doing you at 650,000. And you tell me what are you going to buy at 650,000? I called Sagen and they're like they're working to get it to higher, but we all know how the government works. So you know it is.
You
what
heard it
is.
here.
Yeah, it's and that's the thing. We've been programmed to be like, okay, we show the minimal income, but I told the client, I'm like, you can't have it both ways.
For sure.
And you're going to have to put that 20% down. I don't want to put 20% down. I go, well, then you're renting. It's,
For sure.
That's the thing is you have to have we're not here to be friends. I want to make sure we have a great experience but at the same time is, the way I am with everyone. I'm very black and white.
I love it. Yeah.
And the whole thing is when it comes to your most important home purchase, you can't sugarcoat anything. You have to be the black and white.
But that's what this industry has been.
Exactly.
It has been. And we were never like that. And it made for a hard business, right? It made for hard, putting deals together, right? Because you're given a certain advice. Somebody's going down the road, and they're given a different type of advice.
And that's the thing. That's why I kind of recommend a variable rate too, because the whole thing is that during these increases of 1%, 75 basis point, October, I could see at least minimum 50, if not, back to 75 again. Sure, inflation went down again.
Totally feel like it's a 1.75 for the...
My only concern is we have Christmas coming up.
Yeah.
And, most real
I buy all my stuff now. I get all my stuff done.
That's, it's tough. Trying to get what my kids want.
Your kids change every week.
Exactly. It's whatever that commercial is on TV. That's what I want. So, and that's the biggest thing. The reason why I like the variable rate is as things progress, your rate progresses. And 9 times out of 10, Canadians cannot save and pay down debt. They have to find an ulterior solution. And the reason why, sure, it's not the best financial advice, but be the best advice over the long run, because most of those people their debt's getting higher because they have the higher disposable income. But with a variable rate, you're forced to reallocate your funds as rates go up. So when that 5-year term comes in, it's maybe at 5 or whatever, you already know what that house is going to be.
100%.
And the thing is that you're not spending, because most people carry their debt on their credit cards, 19, 20%. Don't
even get me started on credit card debt.
And we've been known that most Canadians have a significant credit card debt. It's ridiculous, 19, 20%. We're okay with our credit cards, but hold on this, and we're paying this amount of interest on our credit cards. Hold on a second, our mortgages is totally different.
Right.
We have to get used to it. And the biggest thing is a lot of people have the pride of it. They don't want to carry, they want to pay off their mortgage faster. But no, you want to make sure.
That was the old school mentality, though. Pay your house down, pay your house down, pay your house off. But the problem is there's a lot of consumer debt, unsecured consumer debt, and that's concerning. We're at an all-time high. Yep. Right. And when I hear people say, oh, everything's perfectly fine, it's so shocking to me. Right. Mm-hmm. It's very shocking because, I do a lot of research on what's happening, market trends, what's going on in the mortgage industry. Jamie, we'll put it I did state before, I'd said to Jamie, rates are going up. And I remember this, it was 1.99. He's like, oh, I don't know, really? I don't see it, but it does, it's going to happen. And it did. And it's going to continue to happen. But the one thing I just want to say though, Prachi, you've always stayed true to your clients, and that's amazing. I always say thank you so much for choosing TCG. I think you're perfect for the brand because, you carry your heart on your sleeve. You do so good for your clients because you do the extra work. Mm-hmm. You know what I mean? You're not making the quick buck. You take this as a profession. Yep. It's not what's your best 5-year fix. And we talked about this in another segment. You actually do the work. And when I watch you, I'm like, wow, this is awesome. right? This is amazing. You're giving all that information. You're educating the client. And that's what we need to see more of. That needs to come back.
Yep. And the thing is, I take my time to learn the lenders and learn the products.
You know what? I love that about you. That's right. And you educate me on that.
Yeah. Well, that's a big thing. Like, for example, like I had a realtor come to me in August, and he was like, well, this is going to be a tough deal. You know, they tried dealing with one of the big banks. They weren't getting a hold. So, like, for me, another big thing is, you know, having your broker come to you. It's a big thing. Like, you know, I know we're in a world where, you know, everything's so easily accessible, but some things, just like I always like to say, is like clothes and stuff will not truly always be fully digital. And your mortgage shouldn't be either, because the whole thing is that...
That's right. Automation. I wanted to talk to you, Prachi, about automation. You're not that person. You will drive to people's homes.
Yep.
I love that about you.
And that's the
That's
thing.
right.
Like, I live in Niagara, and I drove all the way to Brampton. And
That's right.
That once you have that introduction or engagement conversation, and then you start talking about mortgages, well, you may look at, they may fit, your mindset is your product that you're going to position might be a product. But as you have the conversation, learn about the client, learn about their finances, you're thinking, well, could be a different product. And you mention
right.
Because the whole thing is that at the end of the day, the client wants to make sure they get approved because, you know, it was a quick closing. It was, you know, within a month, 4 weeks, I think. It was.
And you did awesome, and you got it closed.
And it got done. You know, I made sure. And the thing is that when I was there, you know, they weren't huge technology. So they had their iPads and mini iPads and stuff like that. And, you know, we were able to troubleshoot. So I had all the documents on hand. So, you know, they couldn't, for example, we used the net worth program. But the biggest thing is they couldn't get the documents, like, for example, the bank statements printed or saved as a PDF on their iPad. So I was like, okay, use my laptop, we'll get it. We saved everything, done. You know, and we had everything. So, you know, this way...
You're very hands-on, and I love that about you. I love everything about you. Like, when it comes to that, like, hands-on, you're not about the automation. Like, that's not something that, you know, that's
never
amazing.
will one of my clients ever have to fill their information in an application. I refuse to do that. Because the thing is, you don't really know what information can come from having that discovery meeting.
I love it.
And that's the biggest thing. Some people want automation. They're probably more of the rookie broker they're all about turnover. They want to get done in it. I don't, you know, turnover, it's the thing is, if you do your job right and you do it the way it's supposed to be done, it'll be done. Because the whole thing is, the problem with automation is, the one thing is most Canadians are not truthful with their financial picture. They'll over exaggerate something. And the thing is that one thing you can never exaggerate is your income and all your debts. And the thing is that if you pull that credit, it's easy to have that conversation with the client and go, what the heck happened here?
For sure.
When they don't have an R1, when they have an R whatever, it's like, what happened here? Okay, if they have a student debt, you know, did you call in to make sure it's at the lowest possible payment? Certain things like these you could tell the client to do at that point and have them do it, so this way it's done. Like, that's
amazing.
You know,
honestly, Prachi, I think you're great. I think everything you do for your clients is amazing. We're going to sign off. I do want to sign off with the best advice in general. It doesn't have to be the best advice you can give, you know, what's your trademark, whatever you want to give out to the viewers.
I think anything you want in life requires hard work, and it takes time to get there. And, you know, you should apply to that everything. Nothing easy will come handed to you.
100%.
And then that's how you get your pride of ownership.
That's awesome. Prachi, great information. We're going to put Prachi's information here in the, in the description. For everybody else, if you have any questions for Prachi, you're on social media as well. So,
well, I'm not huge into it yet. I know it's been my one thing I have to get into.
Yeah, but he will be. He will be on. So, but you can comment below. We'll relay the message. Yeah. But if you do have any questions, you can comment below. DM me. Like, subscribe, hit the bell notification. But for everybody else, thank you so much. For reaching out and always supporting this channel. You guys are amazing.
Okay, now. Are you ready?
Prachi's ready for this. His water bottle. Ooh.
Mike, what's up with that?
I know.
What's up with that? Being efficient.
Oh, we can't. Oh, we can. takes his time. So I'm gonna try to make this fast. All right.
Joint on the corner where the big boys play.